Hello, everyone, and welcome to another edition of the Forex Technical Market Update. And we are at Wednesday, March 30th, 2016. And market consolidation continues with the euro currency. As you can see, we're still in this consolidation pattern with the euro. And the market has been in this sideways pattern for a number of months now, and this is pretty unusual for the euro. And there are many folks that are out there saying that the euro is bottoming out. This could be a bottoming out pattern, and the market will eventually break to the upside, and the dollar and the dollar starts again on its downward spiral. And other folks are saying that this could be a continuation of the downtrend. So this was the initial downtrend from 140 to roughly 105. Market consolidates, and then the market heads back to the downside. Who will be right? At this point in time, folks, I'm going to be very honest with you. No one knows for certain. I mean, I've read some convincing pieces out there by folks, and I can tell you that no one knows for certain which direction this market will go. All we can do as traders is to follow what the price action is telling us and to act accordingly. So we're currently near the upper end of this channel. Curiously enough, let's dig down deeper. Curiously enough, in mid-February, this area near the 113.70 region held the market. So let me put a line there. That region held the market. Then the market came back up in March, and the 113.42 region held the market. Now we're currently challenging the high that was made was 113.40 today, and we're currently challenging these highs. So what we could see is the market rally from here and challenge the high near the 115 level, or we could see this market turn around in this region. Because within this broader channel, what we have here is a triangle. That's a triangle. Let me just get rid of this line. This is a triangle here, and you can see that the market is currently challenging this trend line. This trend line that I have drawn here. 1, 2, 3. So it has been tested. Well, the first 2 times, 1, 2, tested the third time, and this is now the fourth test of this trend line. So if we do see a bearish candle, what this could mean is that the market could trade down and test the bottom of this consolidation. It will firstly have to trade below the 111 region, and then if it does, it could trade back down into the 109 area. But for the euro currency, definitely consolidation central. And for the currencies in general, taking a look at across the board, we see that most currencies right now are consolidating. Yes, we have 1 or 2 that are moving to the upside, namely the Australian dollar, but we're seeing a lot of consolidation. And as trend traders, consolidation can be a bit frustrating. But just remember that after an era of consolidation and after a period of consolidation, the markets normally break. And when they break, they normally break fairly strongly. And that is where the profits can be had. And that is what we need to keep an eye out on in the markets. Very often, I see traders see consolidation, they stop paying attention to the markets, and then what happens? The markets break, and that's where all the profit opportunities occur, and you miss out on those profit opportunities. So this is definitely the time to be keeping an eye out on the markets. British pound versus the US dollar. We see that the British pound is coming up again into the resistance area. And this could be what you could see occurring here is a almost like a head and shoulders pattern. The market, this will be left shoulder, head, right shoulder, question sign. We're not sure yet. If the market does turn back down and break to the downside, that will complete the head and shoulders pattern with the British pound here. If the market turns to the upside and closes above this area in the 146.50 area or so, 147, that'll be very bullish for the British pound, and we could see a turnaround situation with the British pound. Canadian dollar is coming up on support in the 129.23 region, and we see we have support in 129.23 and also strong support in the 128 area for the Canadian dollar. And keep an eye, Canadian dollar at this point in time is we are seeing the correlation with the crude oil market as very strong. So if we see crude oil start to decline again, we could see the Canadian dollar start its decline also. Australian dollar this morning is up at the 76.75 region and has rallied pretty nicely off of the 2006 bottom. But bear in mind that the market is currently coming up to the Fibonacci retracement level of the 0.618 Fibonacci retracement level. So we could see some strong resistance from 76.54 up to about 77 or so. We could see fairly strong resistance in this area, and a sell signal in this area could see the market head back to the downside. If we do clear the 77 level, we could see the market then challenge that 78 level on the Australian dollar. New Zealand dollar broke resistance this morning in this area has actually held the market at 68.83. Market broke above resistance, but what we see here, we see the 50% retracement level off of the high from roughly 78 down to 62. Market retracing 50% here. So we could be in a turnaround situation if we see a sell signal in the market. So the individual currencies are looking like the US dollar rally could be fading out somewhat, but I think everything will be dependent and everybody will be watching to see what happens with the euro. And if we do see the euro continue to rally from here, break out of this triangle and then break above this 117 area, we would see the rest of the currency pairs really rally, and that could signal to me that the dollar has bottomed out, and we could probably start to see a series of higher highs and higher lows in the market. Taking a look at the gold market, we did have a break above resistance up in the 1191 region, and but for a real turnaround to be had in gold, this is the cash gold, we need to see the market close above the 1300 region. A close above 1300 would be very bullish, and that would say to me that the market has indeed turned around, and we could start to see higher highs and higher lows. But that 1300 resistance has to be cleared for this market to rebound. Just remember, I know a lot of you are very motivated in your trading. Just remember that you have to keep at it. You have to gain the knowledge necessary to become a good trader. Becoming a good trader may not happen overnight, and more than likely what happens is folks lose a lot of money in the process. So if you are trading, make sure to keep your trade small at this point in time. Do not bet the farm. Open up a micro account. See if you can make money on the micro account before moving up to a standard lot account. I speak to traders all the time that have lost a lot of money by just jumping in too quickly. Take your time and learn the principles of the markets. You'll also be seeing a email coming out about a webinar I'm having. It's being held this Thursday at 7 Eastern. So I hope to see you all there on the webinar. I'll actually include a link below this video to sign up for the webinar. Thank you very much for listening, and I wish you all the success in the market, and we'll have more information for you on the webinar. It's a very good presentation about really how to make money in these markets and how to develop a winning trading plan and a winning trading system, because one of the main problems we're seeing is that folks are trading by the seat of their pants. They have no system for success. So the webinar will assist you. This training will assist you in getting a system for success. Thank you very much for listening, and I hope you all have a wonderful day. And remember, the sign up link for the webinar is below this video. Thank you.